Hey everybody, Greg here. So, trading the charts, but what about the news? Everybody is fixated on this tariff news that's coming, and prices have been going down. As we know, this was the last not the last, the option expiration before this one. This one was the quarterly expiration. This was the February expiration that marked the high. And the expiration here was a little crazy, so to speak. These topping tails that formed looked like I was going to get a retest, and then there was this news this day that gapped it higher. Actually, the turn began. This was a Friday, I believe. Yeah, you can see it was a Friday. And then it appeared things were going to go higher until they didn't. And I covered that this morning pre-market. So now we knew prices were coming down this morning, gapping down to the area of this prior low. And so the conflict was daily versus weekly. Weekly being a continuation pattern lower. It may go lower yet, and just because it's stabilized today means little to nothing. It's not even the end of the day yet, so we don't even know if this is going to close green. So what do you do? Well, from a swing trading perspective, just like maybe you would or wouldn't, I personally would not trade a stock with pending earnings news coming out in the morning. You'd need a very compelling pattern to do that, usually using options, credit spreads, iron condors, and so on might be a better thing to do, or just buying puts or calls. Or with puts or calls, it's pretty clean. You can only lose the cost of the option. So you know your ultimate loss, so you can control your risk a lot better. In any event, as far as day trading goes, you can day trade any day. Does it have to be aligned with the daily chart? Ideally, it would be. Doesn't have to be. There's plenty of days that things move up or down intraday in opposition of a trend. So pre-market this morning, I said there are things where buyers began to take control at 9:50. You can see the time there. But at that point, how certain could you be it wouldn't go lower, even though it was in the area of this prior low? Well, ultimately, none of us know anything absolutely for certain. But how do you measure risk in the time frame that you're trading it in is the question. And so while we could always define risk by just pressing the button and putting a stop loss in for share sizing according to the amount of money we'd be willing to lose, that's not very smart, because without the technicals, you're just taking a guess. There's no plan involved, bottom line. So this morning, I went long and called along in the room at this point based on this area right here, and I applied bar by bar analysis. So part of the commentary at the time was the daily charts at support, the deep retracement here, it got above the open, it pulled back. Now, pulling back from here could have went down to the low of the day, and that could have been a trade setup right there. That didn't happen. There was a wide range bar up. Wide range bars are power bars. Now, part of the conversation was, okay, power bar, but in a downtrend, if it negates that bar, well, sellers are still in control and really nothing to do. However, it went sideways. So we applied the same analysis no matter what the time frame was. So as it was going sideways there, I mentioned so far it's bullish price action, but I'm not ready yet to call it as a long. But when it formed that bottoming tail bar, I said, okay, there's buyers on the dip. I said, if it can trade above the high of this bar, I'm going to buy. Now, when I bought the leveraged SPXL, that's the leveraged S&P 500. And we wrote it up into this bar right here. At that point, I said, all right, trade above a prior bar's low here, getting out. And you can see it's gone higher, and we got this little double top, more of a convincing type of end of the trend kind of scenario. And we see on the 65-minute chart, it's starting to make a turn here. There is, I'm just looking how much time is left. 24 minutes left to go in this bar. So you always got to look to see how much time is left in a bar, even though there's a red bar. It could be a green bar in another 24 minutes. So it's into this gap fill here. Didn't quite tag the gap. That's the red line. Yes, the prior day's close. So it's in between today's open and the prior day's close. You can see the resistance there. And the 65 minute is in a downtrend. And we'll see what it does here. Does it roll back over? Does it go sideways? News coming. We all know. So we're not sure what it's going to do. So from a day trading perspective, we can day trade any day we choose with a appropriate pattern as to you trade it. I trade differently than maybe you do, but this is how I did it. All right. It was in a downtrend at the time, but enough information there to go along. So the Qs at the time were underperforming, and part of my commentary was, look, if this can get above the open, the blue line, that is going to help the SPXL go up, S&P 500 to go up. So this is underperformed, but some buyers came in there, and it's okay. We can start to say it's starting to fire on all cylinders. And so this is stalled. It didn't fill the gap, so relative weakness didn't quite get up there. Now, in addition, the Russell, which was showing some relative strength initially, did not get all the way up there. So what's the lesson here? Well, things change, meaning what was showing relative strength now started to show relative weakness. And that can be frustrating. It is frustrating because, look, we get expectations based on the past with a belief about what the future is going to be because of that price action. And then when it doesn't follow through, well, it is what it is. Nothing we could do about it. It's just part of trading. SMHs underperform. It's broken through that low. It couldn't get going. And a primary reason why the Qs, NASDAQ 100, has not participated. The transports are showing a little bit of strength here. Well, they showed some strength last week because they didn't break down under these lows, but they led the way down. And one of the concepts that we use is what showed relative weakness, what led the way down, often begins to show some relative strength. And this is initially a bit of a positive sign for the markets. Right? We're still not out of the woods with this news thing, but let's see what develops in the next couple of days. Regional banks, everything pretty much above the opening price within downtrends, and we'll just have to see where they go from here. Energy up on the day, XLE and USO actually broke out. So the stocks are underperforming, even though oil is beginning to pick up some buyers as it comes into this unfilled gap and these prior highs here. So it was stalled here and broke out. Can it continue above that? Maybe. Maybe we can get a 1, 2, 3 or a 1, 2, 3, 4 type of a pattern. We'll see what that does. Consumer staples doing better. We got a red bar ignored. Pharmaceuticals, buyers stepped up on the breakdown. We've got this topping pattern, and we'll see if this can hold on. But these are just the kind of patterns that I just can't see even bothering with. Downtrends, breakdown, back up. It's just got so much work to do that it just doesn't make any sense because we can find better things to trade. Financials. So we've got a lot of buying today against the weakness. And in part, I assume that is just, hey, let's do the longs while we can, since things have beaten down and some things are near support. Let's take advantage of that and then get out of the way as we get closer to the news, and we'll just see what happens from there. So diamonds, the Dow, similar type of price patterns. Interest rates is kind of marking time down near support and flipped up there, and so we'll see what this afternoon brings, whether these things roll back over. And you see the spiders there up against that resistance and a deep retracement down. I showed you the 65-minute. The 15-minute, I imagine, has a topping tail. Well, not quite, but you can see the up bar and the retracement. So under that low, probably it comes a little bit in moments in time like this where you get reversals at resistance. It's time looking for 0 DTE call spreads So you can go to SPX and look above this level. And a little while ago, there was premium up here to do 10 wide that far away, which seems like, to me anyway, a no-brainer. As always, if you have questions, email us, Greg and Dan at Master Trader.